Oh, welcome back to the channel. Today we have with us Noah. He is a loan officer, and we have a lot of questions that people are looking to buy houses, refinance, and he's the guy to talk to. Hey Noah.
How you doing?
Good, how are you?
Good. Thanks for having me.
Today I got a couple questions for you.
Okay.
Question number one, if someone's thinking about buying a home right now, what are you seeing in the mortgage market?
Now I would say for first-time home buyers specifically, or just in general for home buyers? Both. So definitely, I mean, at this point in the market, whether it's first time or somebody's bought 5 different houses, number one is buying something at fair market value. So definitely in this market, we're coming off of the crazy COVID rates where prices were out of control, people were overspending on houses, and that is starting to come back where buying a house at fair market value to me is one of the most important parts of the home buying process. The last thing you want to do is overpay for something. You have to look at it as an investment. It's an appreciating asset. And so I would definitely tell people to lean on the realtor professionals like yourself and Beth on making sure that the house they're looking at is at a fair market value, which allows me to run an estimate, give that monthly payment, things like that. Another thing that I always tell people is don't always get so enamored with the interest rate. Obviously credit score controls that. You can always refinance, things like that. But at the end of the day, buying something at fair market value is way more important than what the interest rate is going to be.
Awesome. Another thing we run across is people are worried they can't qualify for a mortgage.
Right.
What is the biggest misunderstanding about qualifying for a mortgage?
That you don't need to have 20% down. So a lot of the times people think I've got to have all this cash, all this money, and that's not the case. So definitely there is some skin in the game. So you're going to have things for like closing costs and a down payment. And I'll give you a quick example. A traditional conventional loan, minimum is 5% down. Yes, you have things like monthly mortgage insurance and things like that. But I think one of the biggest misconceptions is you have to have a massive amount of money saved up in order to get into a home.
Okay. So they don't need 20% down, so does it depend on how much their credit score is?
Correct, yeah. So credit score is going to determine what loan program you go for. So for example, if your credit score puts you in a position for a conventional loan, 5% down. If your credit score, say, is in the 600, 650, for example, FHA is the wiser move. That's only 3.5% down. So yes, credit score is the direct driver of what loan program we can get you in, and then that specific loan program will dictate what the down payment's going to be.
Okay, so FHA, VA, and what's USDA?
So USDA, it's a rural loan, basically. The one thing with USDA that, yes, it definitely helps. Everybody loves it because it's no down payment, like VA. It does not mean you have to buy a house in the country, per se. You can actually go to the USDA website and plug an address in. But with USDA, yes, there is no down payment. However, there are much stricter qualifications when it comes like your debt to income ratio, household income. I would say USDA, you have to thread a specific needle. And so if you do meet all those boxes, you can take advantage of that. But that's the main thing with USDA, is no down payment.
Should someone wait for the interest rates to go down, or is it okay to buy now?
Absolutely not. I always say the best time to buy a house is yesterday and the second best time is today. Things are only getting more expensive. And so what costs $350,000 today is not going to cost $350,000 in a year. And the biggest part of your question is the word if, right? We don't know the future. Will rates continue to get better? 100%. But I think waiting just makes things more expensive. So if you wait another 6 months or 12 months, and let's say that house has now gone from $350,000 to $375,000, that $25,000 change doesn't matter when it comes to the rate, because the rate has such a smaller impact. But think about what it does to your cash out of pocket.
Okay. Awesome. What are 3 things someone should start doing today if they're wanting to buy a house as far as mortgage?
So number one, monitor your credit. I would say download like an Experian app or Credit Karma. That'll give you a really good idea of where you are from a credit score standpoint. It may not be exactly what we see on the mortgage side, but it does help to track credit, would be number one. Number 2, I would say call a loan officer. I'd love for them to call me, because that helps me. When you tell me what your credit score is, we'll start having some conversations on, okay, that would be this loan, that would look like this much out of pocket. And we can start talking about what is your monthly budget for a payment and things like that. Because if you need to redirect resources, maybe to pay down a credit card to make a better credit score, those kind of conversations need to happen. So number one, start tracking your credit. Second thing is call me. The third thing would probably be, after that, is work the plan, right? I can tell you everything that that person needs to do to get them in a position to buy a home, but if you don't work the plan, it's not gonna work. So I would always tell people, if you're serious about it, we can absolutely, a loan officer can put together kind of a path. Everybody has a path to home ownership. You just have to be willing to work the plan.
Alrighty, thank you so much, Noah, for answering these questions.
Yeah, appreciate y'all. Thank you.
Talk to you guys soon. See you in the next one. Bye.